Welcome to Market Matters. I'm Nadia Hassan together with Jonathan, Gan and Sulhi Azman. I know it's Friday. I know all of us, all they want to do is knock off from work. But before that, we are going to tell you how the weekend did and what to look out for next week. But actually, John and Sulhi, it's tough, right? Because after a couple of days of happiness, I think people were getting a bit comforted. We're seeing down again.
Well, I think this is page one out of an investment textbook. We still have a little bit of uncertainty when it comes to US. And of course, the non-farm payroll data would give investors a little bit more of a confidence jolt.
Well, in which way Yellen kind of votes, right? Which way they do it.
Correct.
But I think Sulhi's been watching the market the whole day. What do you think?
Well, Nadia, and thanks Nadia and John, if you look at the market today, the market is as bad as the cough that I've been having at the moment. The FMK LCI today closed 5 points down to 1,628.8 points on flattish performance of the regional market. Today there was an nearly equal performance of gainers and losers, with 1.34 billion shares traded, worth 1.7 billion ringgit changing hands today. Now, there's also been a concern on fund outflow. Basically, MIDF reported that as at Monday, a total of 17.7 billion ringgit were net fund outflow, significantly surpassing 6.9 billion ringgit.
Of course, if you want to actually go on the macro scale, right, we are looking at portfolio capital outflows in emerging markets, something along to the tune of $40 billion US. You haven't seen that bad since 2008. Yes, I know.
That's a staggered amount there. Anyway, moving on to regional markets. Regional markets are still worried on concerns of Chinese growth. Basically, today, MIDF research said that China is not likely to achieve its 7% growth target. And in ADB, ASEAN Development Bank Berhad, has also said that they have revised the forecast down to 6.8%. Now, on the regional market, the Shanghai and Hong Kong stock markets are closed today and also yesterday as China commemorates the 70th anniversary of the end of World War II.
It's Golden Week.
It's a Golden Week.
It's Golden Week for them.
Now, on to the regional market. Wall Street ended a midnight trade yesterday with mixed economic signals. S&P 500 closed up 4 points, and Dow Jones ended at 13 points. Now, Japanese stock today, guys, ended flat in thin trade on Friday as investors were reluctant to take positions. Nikkei 225 ended 2.71 points, while Singapore STI index closed 8.7 points down. Now, before I wrap up, guys, there's a concern about ringgit. Now, the ringgit is at 4.415 per US dollar per every US dollars. Now, today Bloomberg reported that ringgit led losses in Asia, and stock retreated as concerns that Malaysia may miss the budget 2016 target, by 2020.
Oh, God. I don't even know what other sound to kick, but thanks a lot for that, Suhi. So moving on to our hot stock of the day amid all that gloom, we're looking at one, I don't know if it's a bright spot because the stock didn't really move. VS Industries closed unchanged at 1 ringgit 38, but we saw something heavy like 18.8 million shares. They had some good numbers. That's why we were looking at it.
Yeah, I think the fact that VS Industries full year profit actually surged close to 150% gives credence to the good performance that the company has throughout the year. Basically, it's an electronics manufacturing services. We kind of feature VS a little bit on this on this show with Chuang calling it very shock.
Yes.
Just a couple of days back, I think. So the thing is that on the positive front, basically, VS recently announced a share split back in July. This has actually made its shares cheaper. I think this would actually give some of the investors opportunity to mop up more shares.
But the thing is, right, I look at things like bonus issues and I look at things like share splits. It doesn't change the fundamentals of the company. It just makes you cheaper, but doesn't always kind of make you better. And I looked at VS and I looked at some of the arguments against. You are looking at something like Forex exposures. They did have issues in China. In fact, they are on its way to winding down the operation. Contributions have been like mildly, let's put it this way, very pathetic. So that's why they decided to get out of there. And there's also dampening demand from global consumer market. You have to remember that when you looked at retail numbers around the world, not just here as well, you saw so much inconsistency. Some days good, some days bad. It seems to be it's almost as fancy as the whims of a Chinese shopper. And I do not mean that in any other kind of way, but the Chinese are the biggest buyers in the world.
Well, Nadia, I think it's possible to actually give VS a little bit more time, because I hear news from a note from UOB Kay Hian's note saying that it's possible that they might secure contracts from Dyson, those vacuum cleaner guys.
Yes, I know what Dyson is.
And then also some key clients which are beverage brewers. So I think Dyson has a reputation of giving out very huge contracts. You know, we saw them give SKP Resources something to the tune of several billion.
Yeah, but you haven't gotten it yet. And I find it funny, John, that you always say, show me the money, but these guys haven't shown the money yet, right? Is it just because the share split made the valuations palatable for you?
Yeah, to me, it's cheap, and you know, I think before the share split, some of the investment banks were touting it, saying that it's going to reach something like 7 ringgit. You know, so and that time it was trading about like.
I don't hear the enthusiasm in your voice.
Really?
Do you like
Come
it?
on. Look, it basically says that its improved earnings for the quarter was attributed to better sales margins, and you know, these are good catalysts for the stock.
You don't need to stand up in happiness, John. But anyway, just to sort of bring it all home, VS Industry does appear to be very attractive because there is strong earnings. In fact, really, really good earnings. Then there's also a lot of potential Dyson deals. Maybe that's looking in the thing in their pipeline. They also had a share split, which of course, just to emphasize, changes fundamentally nothing, but it probably makes them a little bit more palatable. But you know, you are going to have some issues in China. As soon as they wrap that up, things should go around well. But like we always say on this show, you have to wait and see.